Hello and welcome to the week ahead from the Financial Times in London. Here's what we'll be watching in the second week of 2017. US earnings season gets underway as 3 of the big American banks report quarterly results. Have German manufacturers been hit by the shock US election win for Donald Trump? We'll find out when the country publishes its November industrial production figures. Christmas trading updates will reveal whether the holiday shopping period was a happy one for high street retailers in the UK. And Japanese Prime Minister Shinzo Abe travels to the Philippines to meet controversial President Rodrigo Duterte. First, to the US, where earnings season kicks off on Friday with figures from Bank of America, JP Morgan Chase and Wells Fargo. These results come at the end of a particularly strong quarter for US bank shares, the strongest in fact for 24 years, driven by hopes of higher interest rates and looser regulation after the Republicans' election victory. But while these quarterly results are expected to be upbeat, they're unlikely to be as euphoric as the bank's stock prices. Investors will be watching closely, though, for any signs of a rise in bad loans, as our US financials correspondent Alistair Gray explains.
So the results themselves are by definition backward-looking, and given the recent strength in the shares, I'd expect investors to be more interested in the outlook for the year ahead, unless the results deviate significantly from the analyst forecasts. The big question really is what higher interest rates might mean for these companies, and in particular investors will be scrutinising closely for any signs of deterioration in credit quality and bad loans. There's particular focus on parts of the car loan market and in credit cards, where banks have been pushing aggressively in ramping up loan volumes.
Now to Germany, where on Monday we'll see whether the country's manufacturers were affected at all by Donald Trump's US presidential election victory. This should become clear when Germany's industrial production figures for November are published. The figures follow a rebound in production output in October after a sharp fall at the close of the summer. But will the November data show a continuation of that resurgence? Here's our Frankfurt Bureau Chief Claire Jones.
We're expected to have fresh evidence of the Eurozone economy's resilience to the wave of political uncertainty that we're seeing around the globe. The evidence is going to come in the form, on Monday, of industrial production figures for Germany. Now, Germany is the Eurozone's largest economy, and it's also the region's economic powerhouse, so it matters a lot. The industrial production figures for November are expected to be positive, and that's despite the shock win for Donald Trump in the US elections.
The Purchasing Managers Index for manufacturing in Germany has already suggested businesses shrugged off the surprise US election result and showed activity increasing at a reasonable pace in November, though slightly less quickly than in earlier months. The PMIs for December came out recently and showed the trend had continued into the final month of last year, with German exporters finishing the year on a high note, with confidence undiminished by the no vote in Italy's constitutional referendum. Next to the UK, where high street retailers including Marks & Spencer's and Debenhams will issue Christmas trading updates this week. But expectations aren't great. Next, which is seen as a bellwether for the UK high street, was hoping for some good news after a pretty poor 2016, but it just saw a decline in sales in the run-up to Christmas. Our retail correspondent Mark van der Velde has more.
There are 2 things going on. They say there is a cyclical downturn in clothing sales in the UK. So forever and ever, the number of clothes that are sold in UK high streets, the actual number of garments, has been going up. Last year it went down for the first time on a sustained basis, more than a decade. And they kind of hoped that would stop, and it hasn't. And the second thing is a structural shift towards online retail, which is harming Next and M&S and everyone else who's on the high street, because although they sell stuff online, clearly as their stores empty out, they get less profitable, and they're also probably less good at selling online than people like ASOS and misguided people for whom this is the day job.
And finally, Shinzo Abe is set to visit the Philippines at the end of the week for a meeting with Rodrigo Duterte. Japan's a big foreign investor in the Philippines, and the 2 men are set to discuss economic deals. But Mr. Abe's highest priority is political, as our Tokyo Bureau Chief Robin Harding explains.
The Philippines, which sits between China and the Pacific, is at the heart of the contest for geopolitical influence in Asia. China offers the model of its own rapid growth. Mr. Abe is determined to win the Philippines over to his own vision of democracy and the rule of law in settling maritime disputes.
And that's what the week ahead looks like from the Financial Times in London. See you again next time.